Okay, the next big idea comes from the minds of 33 leading fund managers investing in both Aussie and global equities. Don't worry, there is a single stock pick in here as well. But it comes from Future Generation Global. It runs a fund of funds with a very heavy weighting toward managers in the small cap space. Kylie Merrit spoke with the CEO Caroline Gurney and also Nikki Thomas from Magellan, which is one of the Future Gen's global funds. So Kylie began by asking Caroline if her investment committee is still positive on small cap managers given recent performance.
It definitely is. So we have 33 fund managers and we have 18 of Future Generation Australia, and then we have 15 of Future Generation Global, and they are predominantly small to mid-cap managers. So you would have done an awful lot of work going through that many managers, but what we decided from the investment committee is that we really wanted to sort of capitalise on that small cap manager. So when the markets start to come back, we can actually make sure that we're there and we start performing for the long term again.
Because you are obviously tied to, you're a fund of fund essentially.
We are.
And you are tied to the fortunes of the market, and in this case, the small cap end, which, has not had a great year. Have you been tempted to allocate more out into the bigger end, or you're happy to kind of stick with it?
The investment committee, we spend hours actually talking about the fund managers, the diversification, and what type of managers we want in our portfolios. And adamantly, they are determined to stay with the managers we have because they've performed in the long term. In terms of our performance over the 5 years, sort of 9 years that we've been established for FGX, performance has been strong. So we're actually validated in what we're doing, and that's something we are definitely going to stay with.
Mm-hmm. So when you're having those committee meetings, what's your sense? What are your managers telling you about, I guess, what they're thinking, calendar year 2024 and beyond? When
you've got that many fund managers, you really do have different views. You've got some that really believe that we haven't gone through enough pain yet for 2024, and then you've got some that really believe in Q1 that it's going to start coming back. But I think all of the fund managers, what they're actually really good at is making money, and they're in that market looking for opportunities. And yes, we have seen, that sort of safety in large caps, but I think the fund managers, where they're looking at small caps so they can actually identify the companies that are actually going to do well again over the long term.
Okay.
So, they're worried about geopolitical, risk. They're worried about the interest rate environment, but most of all, they're like, we're going to make money, and this is what we're going to do.
There's certainly a lot to keep everybody's minds occupied with right now. I want to bring Nikki Thomas from Magellan into the conversation. Your global fund holds a lot of names in there that people would be very familiar with at the big end. Some really big technology and consumer stocks. Why are you positive? Why are you involved in looking for stuff at the smaller end?
Well, we don't spend a lot of time in really small stuff like you'd see in the Aussie market where you go into the small caps. But sometimes there's a unique opportunity that won't be a major market cap stock at this point, but it has a significant runway for growth, and we can see it's already developed an economic moat around what it does. So we're always going to look for very high quality, but you can find those in businesses that aren't as big, and particularly where there's secular tailwinds behind them, where there's big world thematic changes going on, things like energy transition. You can find opportunities that play to that in all parts of the market, large, mid, small.
It's something that Magellan's always been known for, I suppose, is finding those stocks, not in the Aussie market, but in global markets. What's your thesis? Like, what's the process? How do you even begin to look, in a market when you're not there?
Not being present kind of actually is almost an advantage for us. We get out of the noise of day-to-day in markets. And what we're doing as a process inside Magellan is thinking about how do we invest in really high quality companies and get a structural growth tailwind behind them. So a chunk of our portfolio is always allocated to thinking about where are the long-term tailwinds? How do you get the wind in your sails so you don't have to work so hard? You just have to let these stocks work for you. So it's a really important part of how we go about building the strategy and looking for those opportunities. And when you do the deep work that we do, you don't necessarily start with what's the big thematic. The big thematic can pop out of the page at you as you start to explore and you keep looking at what's going on in markets, and you start to go, wow, that's that's going to be bigger than people realise, or wow, that's really changing things. It can be around policy decisions, regulation, it can be around what's changing across the world because of geopolitics, it can be because of economic cycles, but it will come to us often through the deep dive on the stocks themselves.
Okay, time for the big reveal. What is your pick? What is your big idea?
So the stock I have today for you is Trane Technologies. It's actually an industrial company in the global markets. Small for me, so kind of 50 billion market cap. But this is a business that really is leaning in on the whole need for an energy transition around buildings. So moving towards smart buildings. So if you think about, we were just talking about the air conditioning in this building. If you think about air conditioning of buildings, and so you've got to think hospitals, schools, commercial, data centres. So as the world keeps moving forward, and we start thinking about how do we get better energy efficiency and better usage of energy around managing our buildings, Trane Technologies is one of the leading players in this. So it's a heating, air conditioning, ventilation company at its heart. It's got really smart technology, and it's got tailwinds of policy decisions by governments, the Inflation Reduction Act, the education stimulus going on in the US, the European stimulus around moving the energy transition there. So it's a global business, mostly US, and it's got this incredible tailwind behind it. So through this whole year, it's kept upgrading its expectations. It looks like it'll grow earnings about 22% this year. It talks about the fact that it has a $6 billion backlog, and it's thrown away the fact that backlog's usually about 20% of next year's sales. That's a crazy number if that was to play out, because that says this business is going to be much bigger than the market assumes. So we'll see. We're not assuming that either, but we just see this 5 to 10 year story that will play out, and it is leading in terms of making that change for building managers, has a really smart go-to-market approach, and generates cash flow that kind of is equivalent to profits every year. So the money comes home to shareholders.
How did you find it? I mean,
Hard work.
Not,
that's what we
it's
do.
not by, it's by Australian standards. You said it's not. It would be a
tiny.
small cap if it was. I think we were saying yesterday it's the 316th biggest company in the States or something. But it is
Sorry about that.
by the by
But
the
the
technical.
opportunity
Yeah, exactly.
is 50 billion market cap today. If you think about the growth that it's got in front of it, and often what people think they can't get with a larger market cap is that they don't think the growth's still there. This business could be 2 or 3 times bigger than it is today in 10 years. Who knows? But there is a massive stimulus that is going to happen, and a massive amount of, they talk about mega projects in the US, so projects over $1 billion. It's 600 billion to 800 billion in size, that mega project piece. And if you think about AI and where we're going with data centres, and all the data centres being built around the world to allow this AI to happen, they run hot. So you don't just have to air condition, they have to air condition them well. So for me, the market's always going to be a little bit cautious about estimating the growth opportunity in an industrial, because you tend to get some cyclicality to those. But we just think that that plays to our opportunity, that as the market keeps going, oh, it's actually even better than oh gosh, look, this will grow at 10% again next year, and another 10%. Oh gosh, it'll be 10 again the year after. It's a pretty easy way to make money.
So if you look at the share price, if I'm not mistaken, it's pretty much at all-time highs now. What's your thinking? What is your, what would make you either take profits or go even further in?
So we're disciplined around valuation on these things. So always, I can see a 5-year story that's amazing. But if a stock gets expensive, if it gets to a point where it's like, I cannot see upside in the share price, then you change your position size or you exit it, even though you may believe in the company and the future of the company. So we're always really thoughtful about what's the right price for this, and making sure we don't pay too much or hold on for too long, or whatever that will be. That would be the main concern, I think. This does have a cyclical piece to it. It makes reefers, so it makes refrigeration units for the back of trucks, about 15% of the business, and that does have real cycles in it. So, there'll be times when the market will get a bit nervous about things like that. So we're conscious of those sorts of things, but our view tends to be take a 3 to 5 year view, and we will look through that as best we can.
Okay, cool. Caroline, FGX is a small cap, so you fit the brief. What's the investment thesis for that?
I mean, I think we're incredibly lucky. Like we said, we have like managers like Nikki in terms of Magellan working for our shareholders pro bono. And what that means is basically there's no management fees and there's no performance fees. So in terms of the investment brief, what we do is we take shareholders' money, we invest it with these fund managers, and they are the best at what they do. So they have been specially selected by sort of the financial minds of like, you know, Jana, Morningstar, and a few others, and they work out the whole diversification of the portfolio. It's very much, you know, it is definitely small cap to a little bit of mid cap in terms of 25% overweight small caps and then 25% overweight for mid. So realistically, you know, for us, it's a great investment thesis because you get the greatest minds managing your money for the long term. You get, you know, increasing flow of dividends. They're fully franked. And, you know, we've got a profits reserve for nearly 5 years on FGX. And, you know, FGG, I have to mention that as well. I mean, we've got nearly 8 years there. So in terms of dividends and making sure you have that income preservation, that capital preservation, you know, it's a very good investment.